to How to Trade. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today we're going to be talking about the FOMC Minutes release. It's coming out in about T-minus an hour or so we've got to sort of get out in front of that. That's going to be our fundamental of the day. We're going to look at a few news stories that involve the FOMC Minutes. We're going to touch a little bit about what it is and how to trade it. Now, it's not like just a federal, it's not like an announcement. It's not like a normal Fed announcements. It's not like a CPI. It's not like an NFP. The market takes some time to digest the FOMC minutes. And the reason why is it's a long document. And it takes a while for the media to get out in front, read the darn thing, and then come back with some talking points or maybe how the significance of the event itself. So what I always like to do when we're going into something key like this is I want to make sure that I've got my key markets outlined, and I want to make sure that we have it's one of those things that we need to make darn sure that we need to have our key markets lined up, and we have to understand what the market can do after a big event like this. Now, like I said, it's not like a Fed announcements where the market will go absolutely crazy at 2 p.m. Eastern. That won't happen. But like a delay 5 minutes after, 10 minutes after everybody's had a little bit of time to sit back and digest the release, you can see a big move out of the U.S. dollar today. So let me see, Mike. Good to see you. Shane, it's MD. Confident you're doing well? Yeah, I'm doing all right, Mike. I hope you're doing well. I think that, hope's for children and losers, so we don't hope on this stream. We're confident in what we do. We make confident moves, and if we win, we win. We lose, we lose. That's just the way it is. It's the way it has to be. No, there's really no room to be wishy-washy in this business. You got to get in, you got to get out, and do your best to nail your entries and have great trade location. And those are all things that are going to be very important in the next hour and a half. If you get bad trade location after the FOMC minutes or before it, you're going to really get hurt. So we're going to go through all this stuff. I'm going to sort of set the table for you. I'm going to show you a failed auction in the Great Britain Pound USD that we really highlighted, that 30-minute chart, and it sort of showed you exactly what a stop hunt looks like. We saw an absolute textbook stop hunt yesterday at about 5:30 Eastern time, about 3:30 my time. I'm going to go over that. And it was an absolute textbook stop hunt. In any case, right here, some levels that I would be looking out for if, in fact, I was trading the DXY. Definitely want to keep an eye on 107.31-ish. That's key. That's a key level. Weekly 38% Fibonacci. This isn't really a trend. I wouldn't call this much of a downtrend at all, but we have to respect the pressure, the bearish pressure that we've seen in about the last 4 days or so. So we've got a little bit of a bounce back today. Do we go higher or lower? Well, right now the dollar is gaining a little bit of puff in anticipation of the FOMC minutes. So, it could definitely be one of those things where somebody knows something already. I'm watching. I'm anxious. I want to see what happens here. But the other levels that I would really be watching very closely, 38% clearly in play. 50%, I'm not a fan of 50%, but when you have supporting evidence, we have a 13-day EMA right there. That's my favorite EMA, my bread and butter. You see right there, right around that 50% line, 107.50-ish. That's huge. That's absolutely huge. So I'm going to be watching that level very, very closely. And I think that if we do get a chance maybe to sell up there at 50% plus the moving average, that may be one that we take a shot onto the short. Would not shock me at all if we see a bit of a rally maybe tomorrow, maybe later today after the minutes, and then you see the USD just sort of stall out right in that key technical level. That's absolutely imperative that we know where our technicals are and we know where they are before the number comes out, because if we don't, we're late. And if we're late, we're pretty much going to get slaughtered. Here's a few, economic news events today that we wrote this up in the trade idea earlier that we put out, and every week I like to focus on some of the things that people aren't looking at, because you watch CNBC, you watch all these talking heads, you watch all these traders, and everybody seems like they got a podcast or a show or a YouTube channel these days, and a lot of them really miss some of the most important things that you really should be looking at, especially with the U.S. dollar. The 30-year mortgage rate is absolutely a huge number, and it's one that I watch every week. It comes out very early, typically a little bit before I wake up in the morning, but it's really a great indicator and a great look at what long-term lenders are thinking. And when you see a 30-year mortgage rate that's right around 7%, 6.93, it came down week over week, you can sort of understand that, the lenders are really expecting the Fed to hold interest rates higher for longer. And that's key for us. That's going to really be our roadmap for trading the U.S. dollar, for trading commodities. It's very important that we understand really the significance of those long-term lenders not really wanting to write paper for a very cheap price. I mean, 7%, that's if you're well qualified. If you're not well qualified, you're probably looking at 8s, 9s, maybe 10s. I remember back in the day, I wrote paper, or I got into a couple of deals upwards of 11 or 12%. and you had to do it to secure your financing. But what that really showed us, or what that showed me back then, is that those interest rates were going to be held higher, and it was going to cost me more money to do business. That right there is what the MBA is telling you. They're holding interest rates a little bit higher, and the reason why is they expect the Fed to hold their rates higher, which means what? Typically a stronger dollar, downward pressure on commodities, maybe downward pressure on stocks. The rubber hasn't hit the road yet, but we've really seen the U.S. stock market sort of fizzle in the last couple of weeks, and I expect a big retracement, and I think it's coming anytime. So you're going to want to be aware of these things. Now, is that a more advanced type of an indicator? Yeah, you don't necessarily trade the MBA 30-year mortgage rates, but if you are coming up with an idea of the fundamental outlook that you have towards maybe the U.S. dollar, maybe commodities, maybe stocks, things like this need to figure into the equation. They're not necessarily market movers, but they're very important. They give us an idea of the tone and the sentiment that is right below the surface on these markets. So I definitely want to have some respect for that number. And the other one that we got to look at is mortgage applications down 6.6% week over week. That's big. Shouldn't surprise anybody. We're in February, and it is very cold. It's about 10 degrees here. I don't think it's ever going to warm up. It's been a long winter, and I'm already ready for the warmer weather. But typically in the northern hemisphere, typically in the northern United States, a lot of those housing markets don't do anything in January and February because nobody wants to move with 3 feet of snow on the ground. So I wouldn't really panic about that downturn, but I would be very aware that those interest rates are high. Now, as far as the rest of it, building permits, you can see building permits came in a little bit hotter. These are preliminary numbers. That suggests that developers are going to want to build this year, but just because you pull a permit doesn't mean you necessarily have to use it. Housing starts are off 9.8%. Why? It's because of that right there. The cost of capital is a little bit big, and a lot of the developers don't want to do it, not just yet anyways. So a lot going on there. I would say that as far as an economic event today, clearly the FOMC minutes is going to be our fundamental, but all those other things that we just looked at, they sort of suggest that there's going to be a little bit of meat on the bone with this release. So I know that you can't get the best view of it with this layout, but let me just go ahead and read you what the FOMC minutes are. The Federal Open Market Committee, the FOMC meeting minutes, are a detailed record of the committee's policy-setting meeting held about 3 weeks earlier. The minutes offer detailed insights regarding the FOMC's stance on monetary policy, so currency traders carefully examine them for clues regarding the future of interest rate decisions. Now, that's why we started with the DXY. This really is all about the U.S. dollar, and what do we think is going to happen here? Well, I mean, I don't know. I don't know what's in there, but I will say this. I am waiting for the big fight in that boardroom between holding rates high and cutting rates. That's what it's all about. Brian Barbie, good to see you, Brian. Welcome. Yeah, so, if we're looking to really trade today, I would say it's game on for the U.S. dollar pairs. As far as gold goes, we got a lot of questions about gold. Typically every day I field a lot of questions about gold, and that's great. I like gold. Everybody likes gold. The more gold you have in your pocket, pretty much the better you feel. But something like this, 30-minute chart, we're coming off. Now, why are we coming off? Because that dollar is rallying. Bobby Bob, good to see you, Bobby. That dollar's rallying, and that's putting downward pressure on your commodities, except for crude oil. Crude oil broke out to the top side. We have a trade idea we'll go over in just a little bit there. But you do have really a significant pullback today on the 30-minute chart. You're off about 0.5%. Are we trending? No, we're not really trending, but we definitely pulled off of those highs, which are right up around our 3,000 level, 29.50. We came a long way. We'll test 3,000. I'd almost guarantee it. But, you can't guarantee things, but you can see what's happening right there. Today's high is at 29.47. You washed out a lot of those shorts. Remember that? We were talking about stop hunts, and we're going to go ahead, and I'm going to give you a great example of that, but you almost had another little stop hunt right here. We knew there was a tremendous amount of shorts dug in with that all-time high was their stop out point. And look what happens to the market. I mean, your high right up there was 42.71. You go up, you trade it up there, and now you just completely reverse $20. That's a stop hunt. Bottom line is this. The buyers, nobody wanted to buy up there, and the reason why they didn't want to buy is because, number one, we have a big key event coming out, but they also didn't really, you're not really committed to the sell side either because you're trending higher. But what can you really do to throw a monkey wrench into all of your intraday traders' plans? You wipe them out. And we see this more and more and more and more. This is becoming fast. One of my biggest rules is right there. There's your move. Wednesday about 2 a.m. So that's right after the London Open. What happens? You get a flood of volume. Let's see if we get any. They don't give volume numbers for spot gold, but right there, you really had a nice big break. You washed out all those shorts. Everybody that was holding shorts stopped themselves out up above that all-time high. And then what happens? The market doesn't extend to the top side, and it actually reverses. This happens more times than not. This happens more times than not. So if I'm trading, I got to be really smart about what I do. Do I want to buy in up above an all-time high? No. No, you're going to wait for a retracement, but where do you want to sell at? Let's say we wanted to sell today. Clearly, you wanted to sell up near the top of the market, but that's also hard because you're fighting a bullish trend. So you've got to have a real strong idea of what you want to do in the markets before you get in. For me, gold's a no-fly zone today. I haven't traded gold today. I was looking at my futures charts, and I said, well, what can we really look at doing? I wasn't really too blown away with this market structure, but that right there, that was really the big march higher shortly after the London Open. You wiped out everybody, and then we reversed. So if I was interested in trading gold, the first thing I would do is go looking for a pullback level, something that's going to give me great trade location. So let's pull up a weekly chart and see if we can find a macro zone worth playing. And you'll notice we're just not going to get it. It's too big of a range. We want to work from that spike low right there, 25.94, and really go up to those highs where we just washed everybody out today and get in on a nice pullback. And we're not, it's too big of a range. You're not going to get it. So I would be aware of these numbers and these levels, but I probably wouldn't be waiting around for them. You can't wait like that. You got to figure out something else to do. So something like this, 28.11, of course, that's a great level. We'll probably have a trade idea out on that in the coming days. We'll see exactly how this FOMC minutes pans out. But, something like this, a daily, can I really buy any? I mean, do we have a retracement level I could hit on the daily? You can do it, but you got to be real careful. You got to be careful because this is flat. I mean, there's no two ways about it, guys. This is absolute bowling. It's bowling shoe ugly. I don't know if you guys have ever gone bowling or bowling shoes. They are ugly. They never look good. This market doesn't look good. It's a beautiful uptrend. It's a beautiful macro uptrend. And I'm not saying, if you want to buy it, but you've got to get better trade location because we could easily sell off to 28.50 or 28.25, and nobody on this live stream has enough money to hold that position. Not a leveraged position. So I fully believe gold's going to 3,000. I don't think there's any question about it. You're seeing some compression right up around 29. But right now, getting a good read and a good entry on this market is a real challenge. So what we have to do is we have to say, okay, I've got to watch my risk exposure. I've got to be very careful with what I'm doing with my levels. Should we buy right now? I think it's difficult to make that trade, to pull the trigger on that one. I think it's really hard, and the reason why FOMC minutes are coming our way, we're also sort of really butting right up against that 29.20 level, 29.2075. That's hard. Because if, in fact, we get some bad news or maybe the minutes suggest that dollar is going to be higher for longer, then you will see a pullback. So you've got to be smarter than your average bear when you're jumping into these trades. Do I like 38%? I love it. It's one of my favorites. Should we be trading that right now? Nope. Not with the big-time economic event getting ready to drop, and we could really be in for some chaos. Now, if I get a chance to buy another level, maybe later today during power hour, something like that, ooh, baby, I like that one. 29.04, 62%. It's a nice deep retracement into this range. But take a look at what else. I mean, we talked to a lot of I talked to a lot of you that are smart money concept traders. Well, I mean, just real basic stuff. There's a lot of action down in there. I mean, there was a tremendous amount of action right around 29. I would feel much better buying 29.04s. I would feel good about it. Up here right now, if we wanted to buy, we can buy, but we just got to really understand that, yeah, we could get taken to the cleaners. We already sort of hit that zone right there, sort of hit. So if you're long right here, you're sort of looking for a retracement. The biggest challenge you have is where are you going to stop yourself out at? It's hard. It's hard right now. You got to be careful. Understand that trading should be real. I mean, I got to watch what I say because it's, we've talked a lot of philosophy this week and a lot of psychology, and I've tried to pass along a lot of what my experiences have been. I will tell you, almost for a fact, trading's not easy. Trading's hard. But when things are going well, it's easy. It's easy. The markets line up. Your levels line up. It's beautiful. You get your trade location. You get your prices. And making money really becomes very easy. Now, the problem is we're not in for an easy ride today. Now, if I want to take this long right now, I can. If I want to buy it, I'll buy it. But I'm nervous. I love my levels, but if that level goes, And this with this daily range that we've been looking at, if that level goes, look out below. I would much rather just get ready down there and perhaps grab I wouldn't call it a falling knife, but maybe grab the end of today's range. But I would also love to trade that tomorrow. Something to think about. I'm way behind on the live chat, guys. Let me see. Waiting for the FOMC minutes. Absolutely, Muhammad. T. Marina laugh. Bowling shoe ugly. Absolutely. You got to know it. You got to find a market you like. And boy, I tell you what, that gold market right now is ugly stuff. Let's see. Buying or selling now is really a challenge. Absolutely, Muhammad. You need to wait. I can't tell anybody what to do trading wise. I'm not. I mean, we could go get the CTA. I think that exam's like $1,500, and I could pass it. I've already taken all the the dummy exams and all the study guides. I mean, it wouldn't be hard for me to get a CTA, but I don't know. I never really fancied myself as being an investment advisor, so I can't tell you what to do. But what I can tell you is there's a storm coming today, and it's going to happen probably in about another 45 minutes. So I wouldn't really tell anybody to buy or sell anything right now, but we are ready with our levels. We are ready. Let's see right here. Lion. Good to see you, Lion. New name. I like your avatar there. Man, lions are terrifying. I saw mountain lions when I was a kid up on my uncle's ranch. Those things, there was one up there that was about 150 pounds, which is a big mountain lion. And, got driving on four-wheelers. I got about 10 yards from them. And that thing's, oh, man, they're terrifying. They're so fast, too. In any case, I like your avatar, Lion. Buy or sell, Euro USD. Yeah, we're going to look at the Euro USD here in just a second. Gold. Ricky, yeah, we just covered gold there. Where is it going? Buy? Yeah, like I just said, you don't want to do either one. Let me see. Mike Danuska. Shane, I thought you deserved to know. I started my journey with you 4 years ago. 2 years ago, moved to futures, and now I'm trading options. Finally making money. Thank you. You're absolutely welcome, Mike. It's a long road. It is a long road. I just love to hear from traders that have stuck with it and that have done a lot of really good stuff in the market. I mean, it makes me happy because there's a lot of bad stories out there. There's a lot of sad stories about the markets and people just letting them get away from them. And if you're in there trading futures and options and you're doing well, that makes me feel pretty good. That's for sure. Let me see. T. Marina, I'm about to get stopped out on my gold trade. Yeah, it's a tough day, T. You just got to just jump on it, learn, and then come back ready to go when these markets clear up a little bit. I mean, as I'm talking, our level worked. I still say it's incredibly high risk, but the level worked right there. 38% was right there, 29.20, and we kicked higher by $2.50. That's a beautiful little scalp. That's not a bad scalp. I mean, you can make a living doing things like that, but I would be very careful. I would be very, very careful here. Let me see. From the last pullback, so taking your advice, Shane, falling on the knife. Yeah, I mean, I hate to be so graphic about it, but sometimes you just fall on the sword and you get ready to go again. I had to do that yesterday. Late in the day, I had 4 contracts WTI crude. I wrote in the live chat that I was going to be looking to sell 72s. We didn't get that. We got a pullback down to about 80. 71.80ish, and I bought them. I bought 81s, and I sat there for 2 hours, and we just didn't get any price action at all. I had a pretty good feeling we were going to rally from there, and look where crude oil's trading now. We traded up around 72.90, so that should have been a layup, and I just ran out of time. I had to fall on my knife and take it wasn't a very big loss, but it was about a 3 or 4 pip loss, and that was a trade that I really was confident we were going to get a nice bump right before the electronic close, and I had to exit it, and the reason why is I didn't have the margin money to hold it overnight. That cost an absolute fortune to hold through the market closure. So interesting stuff. That's all I can say. Let me see. Moses, hi, how are you? I'm doing pretty well. I mean, I'm starting to get over the chest cold. I don't feel great, but we got a little bit of energy today, so I'm looking forward to really getting it on here with the FOMC minutes. Let me see. Reserve render. Gold, go up or down in the FOMC? Yeah, I mean, I have no idea. I can tell you that this key level right here is a big one, though. So if you do see that 20 level get washed out, I would be looking for a move probably down to 12 or 13. That can happen. I'm full disclosure. I'll be on the sidelines probably till tomorrow morning. I'm going to let this sort of – and I haven't really done anything this week trading-wise. I mean, we had President's Day on Monday. Tuesday wasn't feeling real great. Didn't want to take a tremendous amount of risk. Crude oil trade towards the end of the day should have paid us off and didn't. But that's okay. Today, haven't really done much at all. Tomorrow will be a great trading day, and I can't wait to get it on tomorrow. So very much looking forward to that. Let me see. Team Marina, what's better, options or futures other than riskier? I don't know much about options. I know that I want to make a few trades on options on futures. And essentially the game plan is to short these markets going into probably Q2 or Q3. I don't know if I'm going to pull the trigger on it yet. I don't know much about the options. I know that you pay the premiums, and I know the premiums are really tough to beat. Depends on what strike prices you're buying and selling at. But, well, like I said about options, go to optionsellers.com and check that out. You want to learn about selling options and getting washed. It can be very. The beauty of options, the reason why everybody likes options, and by everybody I mean most of your retail traders, there's so many websites out there, so many YouTube channels on guys and gals that are they love buying the out of the money calls and the out of the money puts. And the reason why is if they do get a big move in the market, they can leverage their gains out and make a lot of money. But it really is gambling, and understand that when those folks price those futures contracts, they know what they are doing. And so I don't know many options traders that can beat them consistently. But then again, I don't know many options traders. But I like futures. I trade futures, outrights exclusively. so that's my preferred weapon of choice when I'm looking to make some money. But I'm going to tell you right now, it's not for everybody. Futures markets are fast, and they can get away from you in a very, very big hurry, and that's what makes it really hard. It's a tough mental game, because you can lose a lot fast and you can also make a lot fast. But if you stay patient and you stay to a game plan, you've got a chance really to make the chaos seem normal. I don't know if that makes any sense. Let me see. Gold's down. Big level right there at 1920. I'm watching it out of the corner of my eye. We're going to talk about this Great Britain pound here in a second. Then we're going to flip over to the Euro USD. We do have a trade idea on the board for the Euro USD. Let me see, Mike. Options and futures are both so different. Both are great, but for different reasons. 1,000%. 1,000%. A lot of folks with not much money, really small accounts, or just limited capital. What they like to do is to trade options to try to make the big windfall profits that we're all sort of in this for. And the futures markets can be very good, but you need staying power. You got to have some money to let some of these positions run, or else you just wind up just cutting off a lot of winning trades. Let me see. Rui, hello. How are you? Let me see. How is the multiplier decided? What have I missed, Emmanuel? Not a whole lot here. We're just good evening. Good evening to you too. Let me see. Lazzy Zebek, buy or sell? Well, buy or sell. I wouldn't be doing either right now. Let me see. Sohn, what other indicator can you use for a pendulum entry confirmation? I mean, how to get the perfect pendulum entry. Yeah, the pendulum strategy is one that we use quite a bit here in the trading room. I like to go over the pendulum at least once every few weeks because I really like it. As far as another indicator to incorporate into that, it's not designed to get another indicator in there for confirmation. It's a pure price action play. But if you were going to use something, you could potentially be using something like a momentum oscillator, like a MACD or an RSI or stochastics. But you don't really, the momentum oscillators are sort of flawed because that pendulum strategy is designed for flat markets. So I hope that helps out a little bit, Son. Let me see, Smasher. How do you predict this FOMC minutes is going to affect the market? I don't necessarily know that we're going to get much movement. Right now, it looks to me like it's going to be a bullish U.S. dollar, which is going to be bearish for your commodities. So right here, we saw gold. We talked about that being high risk. That level is going to be gone. I think gold's going to trade down, but you can't sell it. You don't have great trade location. I think you're going to see a stronger dollar. All right, Great Britain pound USD. We talked a lot about my key levels here. We had sort of a sell idea right in this zone, and it only got about 30 or 40 pips, 30 pips, and then we retraced and sort of got knocked out of this one. The biggest problem that I have with all of this stuff is that we have to be able to understand what markets do. And like I said, I got to watch my language because a lot of times, when you're talking to other traders and stuff, there's a lot of profanity involved and a lot of sort of comparisons that are rude, but they're true. And one of the things is that the markets do is the markets are out to get as many people as they can. And I don't mean that in a bad way. That's what it is. And we highlighted this double top area right there. That was a Friday top, and that right there was a Monday top. And we were very, very specific that if you were holding shorts down here, you can't afford to just stop yourself out one tick above this. You got to let these things develop. And the problem that you really ran into here is you got your stops run, just like the gold market. They ran the stops. Bang, there was your spike high up to 126.40. The high right there was 126.35, and then you got a reversal. Then the market absolutely reversed. You see things like that happen over and over and over and over again. So always remember that, okay, well, I'm going to put my stop loss right up above these swing highs or right up above my market structure. You can do it, but I highly recommend giving it a little bit of room up there because, I mean, this is a 5-pip journey. You've already taken, and what, a 30-pip draw. What's another 5 pips at this point? You know, you let these things play out, and what happens right up there? So you sort of run it, and you get a hammer formation, a nice 30-minute hammer candle, and that's pretty much the top of it today. That happened yesterday. That's a classic stop hunt. That happened yesterday, 5:30 Eastern, 3:30 my time. That is a stop hunt. Went up there, knocked out all the shorts, and then what happens? Market reverses and falls apart. That stuff happens like clockwork. So when you're trading, you got to have a little bit of strategic moxie and a little bit of savvy and say, hey, listen, we're going to go ahead and I'm going to be real smart with my stop out locations. I don't want to cut these trades off too soon. You really do have to let them work out, or else, you know, you're just going to be dodging in and out of the markets all day, which is great. You just got to be really disciplined, have tight spreads, and also get minimum slippage. So remember, if you want to start trading right away, check out Switch Markets. This is our partner broker. They've got thousands of global markets, fast and simple funding, 0% commission accounts, and they've also got some big-time bonuses that they'll help you boost your liquidity and your buying power right away. Let me see. Yep, smasher. I have no idea what's going to happen. I'm going with a stronger dollar, though. It's starting to look like that's what's going to happen after the FOMC minutes, really, when they drop. Now, as far as what's going on, you know, in the rest of the world, Treasury yields are a little changed as investors await the FOMC meeting minutes. So there's one big key thing you got to take away from reading the FOMC minutes today. You're going to see, how do I put this without sort of tempering your expectations? You're going to see volatility, but it's not going to be fast. There will be a directional move, but it won't happen immediately. Now, a lot of these folks are really looking for a divide in that room. They're looking for a divide in that conference room. They want to see if Jay Powell's fighting with some of the other members. They want to see if Jay Powell's getting ready to fight with the Trump administration about interest rates. So we got to really, really be aware that it's all about the division in that boardroom. So what I want to see is which members are on which sides. I want to see if there's a division in that room. If we're talking about rate hikes, has anybody mentioned a rate hike? They should be. Inflation's high. There's no two ways about that. So let's say we're trading something like the Euro USD. You've got a nice big move. It looks a lot like the Great Britain pound trade that we just sort of outlined, but we did have sort of a key zone, and it doesn't look like we're going to get a chance to trade it. 105.75 right up there was our trade ID, our nice resistance zone. So beneath that line, you probably would be bearish, but you don't sell right now because look at our retracement today. I mean, it's been a significant one. Right now we're off about 0.32%, which is pretty good move for your Euro USD. So, if you were going to trade this, I would definitely be aware of my macro levels, 105, probably 105.50 to 105.75. Key level. If you get a big move out of the FOMC minutes today, then yeah, that's probably where you would pull the trigger and go short. But the real question is are we going to get that kind of move in action? I don't think so. I think we're going to rotate just exactly where we're at and then probably trend a little bit lower. I went on record a long time ago. I was asked a lot of questions about the Euro USD. Shane, how low can the Euro USD go? Where can it go? And I said it could go to par. Par would be 1.000. I could easily see that happen. And take a look at where you're at. We last traded par when? September of 2022. That was really a key time. I mean, we were dealing with trying to get the world back from COVID fully still in 2022. And this area right in here was when we saw par value be traded with the Euro USD. So if I'm trading this thing and I have a position on, I'm holding it probably until par value, and I think that's what a lot of the institutions are doing as well. You can see this is a significant move. I keep saying that, but it's not the move of all moves from 112.17, but the last 3 or 4 months have been rough, have been absolutely rough on Euro USD longs. So I would be conservative with this pair. I would love to sell right up there at our 38% level. I just don't think we're going to get it. Now, as far as a higher risk type of a setup, one of the things I really like to do is go right down to a 4-hour chart on the Euro USD. Forex pairs, 4-hour chart. That's pretty much where I start. I don't like it. And the reason why is you see these moves, but it's just really tight, and then there's a break, and then there's that, and there's that. It's just not any good. For me, I would really be waiting. We've got to see disequilibrium. This market needs to blow up or something and give us a chance to trade it when things are out of whack. That's where we get our big edge. We don't really have much of an edge trading right now. You can go short or you can go long. The question is, where do you stop yourself out at? There isn't really anywhere to do it. I mean, there is no trade there in my view. If you wanted to buy right now 104.12s and stop yourself out underneath 104, go for it. You can do it. You just got to be disciplined and make sure that you get out of the markets when you need to get out. You can't hold it. You can't say, well, I'm going to let this thing bleed against me. You don't want to do that in the next 30 minutes. That's not what you want to do. Let me see right here. Mike, let's see. Mike, MD. Market executors build their position over time because their size is massive. That's a fact. Consolidations and stop hunts, fake outs. Yeah, I mean, that's exactly what happens over and over and over again. So if somebody was sitting there and saying, okay, Shane, what are we going to trade? What are we more likely to trade next? Par value or, 107.50 or 108? And I would say par value. If I was betting on the next 400 pip move and they'd say, okay, what do you think? It's going to go to 108 or par? I would say par. And the reason why is we do have some downward pressure. We have reason to believe the U.S. dollar is going to stay stronger. Remember, the EU's cutting rates, Canada's cutting rates, the RBA's cutting rates. Everybody's cutting rates except the Fed, and that's going to mean a stronger dollar. So we're watching relatively closely, but as far as a trade idea right now, I would be a seller up there at 105, probably 105.50 to 105.75, somewhere in there. That would pretty much be where I would be looking to sell here on the minutes. As far as the rest of it goes, I mean, we're just sort of in rotation. There was sort of our look right here. I talked a lot about this Swissy yesterday with my diagram. It's a crazy drawing, but it's correct. We knew that if 62% went, you were going to get the big rally, and that's exactly what happened. Was it tradable? Not really. But as soon as we broke through right in here, boom, off to the races. So that was a decent call, I would say. One more market. Let's go ahead and call it a day. We've got Bitcoin right here, 4-hour chart in Bitcoin. Not a bad time frame to be trading crypto on or Bitcoin. It's just a question of, what you want to do here. For me, it's relatively simple. If I'm trading Bitcoin, I want to get long. The problem is where do you get long at? We could buy right now, I guess, but, the stop hunts that we just talked about, the liquidity providers and the MD, the point that he made about positions being built, there is no question that in this mess right up here, there's been a tremendous number of longs that are really waiting for the next leg up in Bitcoin. Now, they haven't been chased out of the market yet. I mean, there's a lot of folks that are holding longs, and they're holding them from 100,000. It's not wrong, but what's liable to happen in this market? Just think back to that Great Britain pound chart we just looked at. Everybody in the world sees these spike lows right in there, specifically that one that developed back on the 13th of January. More than likely, you're going to trade down into here before you trade back up. Very confident Bitcoin hits 125,000. I think it happens before the summer. How would I trade it, though? Well, you could buy it on the cash market and say, okay, I bought 95s, and I'll get out at 125, so I'm looking for a 25%, a 30% pop on this. Yeah, okay, you could do it. But like MD said, I mean, you got to have deep pockets to play like that. So if you're trading Bitcoin and you're not doing it on a cash market, or if you're doing it leveraged, you're applying leverage to these positions, you need to be disciplined and careful about where you buy. So for me, it's relatively simple. I'm watching that closely. I would be absolutely shocked if that spike low that developed early this year doesn't get wiped out before we get a big rally. So if I was doing it, pretty good market structure. Love that swing low right there, and I would just stick with my Fibonacci's. What could you do? You could buy 38%, 86. 86 is better than 95s. You could wait for maybe a big pullback down to 72. That would be fantastic. I don't know that we get that. Or maybe even a great big pullback down to 60, 62, something like that. These are investment decisions. These aren't really trade ideas. 38% would be a trade idea. If we get a $10,000 sell-off or another 9,000, you could probably buy 87s, 87.50, something like that. You could do it, or 87.5. You could do it. Probably get away with it. But I'm waiting. I'm anxious. I think that you probably are going to wash a lot of those retail longs out beneath January's low before we head up to the promised land, which most people believe is 125, 150, 200. I don't know how high Bitcoin goes. Now, as far as being a real disciplined investor and somebody that loves playing with a big advantage, that line in the sand right there would be it. I mean, think about your smart money concepts and your market structure stuff. Look at all the business that's been done there. I mean, that is an order block of order blocks, 65, 70. Could we get a pullback down there? Of course. Anything can happen in crypto. But that would be a real strong buy, maybe 65,000, somewhere in there. There's a lot of folks out there waiting for the big pullback. Typically, you get a big pullback and washes out all the longs. It's just sort of the way that it works. All right, guys, I'm going to go ahead and sign off here for another day or so. We'll be back tomorrow. It's going to be a lot more of a technical talk tomorrow. We're going to talk 9 EMA strategy plus the Fibonacci retracement, and I'm going to go ahead and show you how to execute that trading strategy tomorrow. We put out a video last Friday that sort of gives you a little bit insight into that strategy. It was fairly well received. We're going to have another video out. We're going to be moving our YouTube release dates from Fridays to Tuesdays. There's a lot of reasons for that, but this Friday there won't be a new YouTube video out on How to Trade Calm YouTube channel, but we will be coming out with another one on Tuesday, and it's going to be more than likely a strategy video, probably on the 5-8-13. I get a lot of questions on that one. All right, everybody, I'm going to sign off for now. You guys have a fantastic trading day. Watch yourself. FOMC minutes drop in about 25 minutes. Watch yourself. Be very careful. We don't know which way the market's going to go. No one can know that. No one can know that. Well, maybe Jamie Dimon and JP Morgan, but nobody really knows what's going to happen on this. I'm watching closely. I want to see if there's actually dialogue between the FOMC members where some of them are talking about raising rates, some of them are talking about cutting rates, and some of them want to hold them higher for longer. That's what will move the markets. Remember, it takes a little while for the markets to digest these numbers. There's no shame in sitting out the rest of today and coming back swinging tomorrow. That's probably going to be my game plan. All right, everybody, have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.